everybody. This is Brett Andrews from the Anderson Lee team. Happy October 5th. Happy fall. Everybody's doing good. Today you just got me. Ian is
Hey Brett, I don't know if you're muted or not, but I can't hear you.
You can't hear me. Okay. Dan, can you hear me? First time.
Yes, I can hear you. You're good.
Okay.
Is it me?
It's you, Tom.
Must be Tom. All right. So
might be me.
We got on 15 minutes early and worked all this.
Yep. So yeah, we're doing our first YouTube live stream today for our mastermind, Be a Better Agent mastermind call. So bear with us, a little bit of technical stuff, but thanks for being here. Really appreciate it. Today we have got a gentleman that I've done some business with, really nice guy. His name's Tom Carney, insurance agent. He's going to be on to talk a little bit about insurance, kind of stuff that we have a lot of questions about, that we get questions about. And just, in our market right now, there's some things that are shifting, and one of those big things is insurance. So Tom, why don't you go ahead and take it away? Thanks for being here, buddy.
Well, Tom still can't hear yet, so he's going to work on
sound. So, okay. So I guess
Tom, go check all of your audio output in your device, in your main devicing.
Technology.
Brett, I know we were probably going to do a market minute towards the end of the episode. Do you have any market minute conversation now we want to hit up top?
Good idea. We'll just market minute as we figure this out with Tom. Tom, if you can start hearing me, give me a thumbs up. All right, so what's happening in the market right now? As we've been watching the last couple months, the interest rates have been getting worse. That's just what the market's doing. Big numbers. Tomorrow we've got the jobs numbers coming out. If they follow what happened on Tuesday, expecting a correction, it is going to be kind of this kind of market for a bit. So just, it's going to be important that we talk to our clients, just get them under the idea that rates are still going up. Waiting is going to just equal higher interest rate. Better to buy now. Better to get going, get something locked. I follow a bunch of different crystal balls that kind of give me an idea of what the market's going to be doing. They're all getting a little bit more pessimistic. I wouldn't be surprised if we saw rates in the 8s and 9s by the end of the year. Hopefully with sometime mid-year 2024, a correction and start coming down. So we've got some stuff ahead of us. So got to bear with it. Got to keep your nose to the grindstone. Do the old stuff. Tom, can you hear me?
I can hear you now. Can you hear me?
Yes, that's great. So, yep. Market minutes finishing up. Rates are getting higher. Still a good time to buy. Lock now. And here we got Tom Carney. Tom, thanks for joining us.
Hey, thanks for having me.
Yeah, man.
Yeah, I'm excited to be here. Yeah, so today I'm here to talk about some secrets for realtors. A little intro on myself. I'm a third-generation insurance agent. I own a local insurance agency here in Colorado Springs. We are a brokerage, so we're not captive. We don't write, just State Farm or just Farmers or anything like that. We have a pretty wide variety of carriers, allowing us to basically find you the best coverage for the best price. I'm a personal lines coverage specialist. That's a designation that I currently carry. I'm also on my way to accomplishing the certified insurance counselor designation as well, which is basically the highest designation you can achieve as an insurance agent. So excited about that one.
Cool. So Tom, tell me just straight up off the top, difference between a broker and I think you said captive agent. What's that mean?
Yeah, so like I said, a broker, we usually have access to, we have about 20 plus carriers here in Colorado. We're also located in Minnesota as well. We have about 70 there. We've been in Minnesota a little longer. So that just means we have much more opportunities, a much larger appetite for placing, maybe some hard to place policies, or maybe it's an old home that, State Farm doesn't want to write or Farmers doesn't want to write. Those captive agents, When I refer to that, they can only write with that one specific carrier. So a captive State Farm agent can only write State Farm. A captive Farmers agent can only write Farmers. Us as brokers or independent brokers, we can write with a large variety of carriers.
Got it. So benefits on that would be like let's say you've got a log cabin up in Woodland Park that that USAA won't touch because of the fire problems. You've got a product that you can then put it into. Cool.
Correct. Yeah, it definitely comes in handy in that case. I would say the main benefit of having a broker is, as I'm sure we've all experienced this year, is premiums going up. If you're with State Farm and your premium goes up, that's your only option. You're already with State Farm. It's going to stay with State Farm. If you go with a broker or you switch from State Farm to a broker, we're going to have a lot more options with our carriers to reshop it and make sure that you're truly getting the best deal, best bang for your buck. And we do that quite a bit for our clients. So we reshop on renewal. When they renew after a year, we reshop it to make sure they're in the best spot there, and kind of check out all of our options there.
Well, it's fun. I'm glad you mentioned the fact that all of our premiums have been going up.
Yeah.
Talk about that. Why is that, Tom? Why are we paying more for insurance right now?
Oh man, how much time do you have? I could probably.
You say inflation, I'm going to go and kick you off the call. So.
Unfortunately, that is a big reason. But no, I mean, every state is basically experiencing increased costs of premiums this year. Colorado, especially because we live in a state that's so prone to claims and to natural disasters such as hail. We do have a lot of wind and hail damage, and when everybody is filing claims for that, all of our carriers are now paying out, all of those claims, and they've got to make it profitable for themselves too. And so what they're doing now is just trying to recoup from all of the losses they've suffered from, these crazy hailstorms that we've experienced. If you're talking specifically auto, I mean, we have a bunch of people moving here. This is a state with high rates of accidents and crazy drivers. I'm sure we've all experienced that in Colorado as well. Lots of people on the road, high thefts. So really it just, like I said, how much time do you have? I could probably do a standalone presentation on why we're having increased rates, but there's a lot that leads into it. And fortunately, we just kind of got to bite the bullet this year and, hope the cycle starts over again in a year or so.
Gotcha. Do insurance rates ever come down?
Oh, sure. Yep. Yeah. So I would say typically, this cycle that we're in right now, it usually happens, I would say every 3 to 5 years somewhere. It's a kind of an endless cycle. And typically what happens is, somebody tries to find a solution to it. Progressive did this a while back with auto insurance, where they came in, they're like, hey, we'll write insurance super easy. It's super quick. We'll take you on. Our rates are cheap, everything. Well, then all the other carriers are usually like, well, now we got to be competitive again, and the cycle starts over. But this year, I think, especially after COVID, it's been tough with, materials and cost of claims have been on the rise. And so, when you do have a loss, whether that be to your auto or to your home, the cost just to repair that versus what it would have been pre-COVID is insanely high. And so this is right now at a time where, like I said, carriers are trying to recoup some of their costs on claims here.
Got it.
Yep. Yeah.
Cool. You want to go into your little presentation a little bit? I'll shut up.
Yeah, let's do it. Yeah. So I really just wanted to talk about some things that real estate agents can kind of keep in mind and maybe relay to not only their clients, but maybe the mortgage lender that they're working with, or, whoever is a part of the process with them and their clients. But really this is to kind of help the realtor look like a little bit of a pro in this. And some of this might be basic, some of it might be stuff people already know, but I do want to reiterate the importance of some of this stuff. So I'll go into the first one. Slide, please. The first one is the dwelling coverage. Most people will know this one, like I said, but there are a few things on this one. And this is something that I think is what keeps the insurance industry and insurance agents in business. When there's so much competition, you would think at some point it's going to run out, but really this is kind of another endless cycle in that dwelling coverages are constantly on the rise. They're constantly changing, especially right now. To rebuild a home today versus pre-COVID, as I was mentioning, it's going to be a lot more. And a lot of people don't really look at, they get their insurance when they first get their home and kind of leave it. They say, I'm good. Not a lot of people really review it every year. And so these dwelling coverages, they increase every year. So the first note I have here is having an accurate cost estimate, replacement cost estimate, in that, I always recommend reviewing your policy every year, especially if you're making changes, if you're doing renovations, if you're adding on anything like that. Definitely review what your home is covered for, to make sure that if you do have a total loss, that you'll be paid out to the fullest extent. There's a coverage on policies that has become more popular that I like, and that's that extended dwelling coverage. This sometimes comes standard with policies. Sometimes you have to add it on, but just for numbers' sake, let's say you have a home that's worth $100,000. This extended dwelling coverage is normally an additional 25 or 50%. So they usually add a cushion window of 25% or 50%. So, you may have an additional 25,000 on that $100,000 home. And sometimes this is a misconception where the client thinks, well, I'm really insured for $125,000, even though my policy says dwelling is covered for $100,000. That's definitely not the case. This extended dwelling coverage is more of a cushion window. Like I said, if there is increased costs of inflation, or whatever may be the case that is making your claim more expensive or the payout more expensive, that's just a cushion. But your home does need to be insured to its full replacement cost. And that's when I brought into the valuation methods. There are different methods to evaluate the cost of your home. Definitely the most important and best one is the replacement cost. That's the RC there. And that's just really just as it sounds. What's it going to cost to replace my home? The actual cash value is another valuation method. And this one is kind of sneaky. Some carriers, some agents will sneak this one in because it'll make the policy cheaper. But it's definitely the worst out of the two valuation methods, because it does account for depreciation. So if you had that same $100,000 home and it's a little older and it's depreciated by $20,000, now the home is worth $80,000, and that's what the insurance is probably going to pay out versus that $100,000. That last one there, functional building valuation, is not quite as heard of. It's used more for older homes, which we have a lot of those in the old strip, the North Strip downtown here, the old North End. You get a lot of those homes back from 1800s or early 1900s. And basically what that is saying is, we'll replace your home to what's going to be functional, but we're probably not going to be able to find, 1800s, early 1900s crown molding, so basically it's just going to make it functional again. Not too unheard of, but not very popular at the same time.
Got it.
Lastly, on this one, this is a huge one. This is becoming more popular with carriers that are trying to stand out. And this is the guaranteed replacement cost. And basically what this is saying is the carrier guarantees they're going to replace your home no matter what the cost is. Same with the extended dwelling. Your home still needs to be insured to its full value. But then there's no cap after that. So say, hey, we had this insured to $100,000, but really for whatever reason, it's going to cost $200,000. You don't have that cap anymore. They'll go up to $200,000. They'll go up to $300,000, whatever it is. They guarantee that they're going to replace your home. So I always look for that one. Some carriers offer it. Some are like, heck no, we don't want that. But it's definitely a cool one to have on there.
Interesting. And like, is that, if you were to do that higher premium, I'm guessing monthly?
No, so typically it's a few carriers that are doing it. One that I like that does it is called Acuity. Acuity is a carrier that's more popular in the Midwest, but they are here in Colorado as well. And they do it, and it's just included on their policy at no extra cost. And the reason they're doing that, like I said, is to stand out in comparison to the rest of the carriers. They want to say like, hey, we had pretty similar, premiums versus State Farm, but we have this guaranteed replacement cost and they don't. Yeah,
that's cool.
Yeah,
so the goal there is more. It's more of a marketing thing to get more policies written.
Correct. It's a win-win. It's a win-win for, the policyholder and the carrier. So, yep.
That's cool. I've never heard of that before. That's interesting. That's great.
Yeah,
Okay.
absolutely. Yeah. All right. We can go next slide probably. All right. Yeah, this is some miscellaneous coverages that not everybody looks for. Usually these are just add-on coverages. Brett, I know you and I have talked about loss assessment, and this is one that's getting more popular, especially if you're part of an HOA or, maybe a townhome association. I just had a townhome association that had to, when a homeowners association or a townhome association, whatever it may be, has a big loss, let's say it's a big hail loss and all of the roofs are damaged, more than likely the association itself is not going to pay for all those damages. What they're going to do is divvy up those damages and give portions to each person that's a part of the association. So, it may be 50 grand worth of damages and you have 10 people, each person is going to owe 5 grand. What this loss assessment does is covers that cost that's your portion. So like I said, I just had a townhome association who had probably 2 million in damages. They have about 80 residents and now they divvied it up. And, all I could think is hopefully each person has loss assessment. Otherwise they're going to have to pay that out of pocket. So definitely for realtors to know who are selling homes that are in a homeowners association, or even have a client that are buying in a homeowners association, this is something that could make you look definitely like a pro and just mention, hey, when you are shopping for insurance, check out loss assessment because it's very cost affordable and it'll save you quite a bit out of pocket if/when this does happen to you.
Yeah. So for example, let's use that a condo that fell down in Florida a couple years ago. Right?
Sure.
Where they had, I think the assessment on that thing was like $3 million or something like that.
Sure.
They went to the everybody that owns a unit in the condo says, all right, your portion of this $3 million is going to be $85,000 out of pocket.
Yep.
Loss assessment is going to cover that $85,000.
So it's always a limit. There's always a limit that they'll cover up to. Most carriers will have it around 50,000, up to 50,000. Some will stick it as low as 5 or 10,000. So you always want to check that number and see, have a discussion with your insurance agent, see if you want to raise that number and what that's going to look like cost wise. But like I said, it's a pretty cheap coverage to have on there that could save you quite a bit in the long run.
Yeah, especially even if it's $10,000, it's $10,000 that you're saving.
Exactly. Yep. Another one I have on there is higher liability limits for families with more or younger children. A lot of people don't think about that one, but especially if you're going to have, the liability covers quite a bit of things, but especially if you're going to have, young kids, say you have 3 kids and they all have friends and they all start having these friends over at the same time. Now you got a house full of 20 kids and if something were to happen and those kids were injured, we definitely want to make sure that we have high liability limits for that. The standard coverage for that is 300,000. I always like looking at 500,000 just to boost it up a little bit. I always recommend umbrella coverages for the same reason, because most homeowners policies will go up to 500,000. They usually won't go up to $1 million, but when you tack on that $1 million umbrella policy, you get another, $1 million in liability coverages, and those umbrella coverages are also incredibly cost effective for what they provide. So that's one to consider. Service line and equipment breakdown are also very cheap. Service line is basically any service lines leading to and from your home. So whether that be sewage lines, electrical lines, stuff like that. Typically the homeowner is responsible for damages to those. Let's say you're digging in the backyard and cut a service line. Now that's going to be out of pocket for everybody to come out and fix that and repair the damages. But service line is, I want to say typically around $50 for the year. And that'll save you thousands of dollars out of pocket if that were to happen.
Would this cover, for example, say you've got a main drain of the house it has collapsed and you have to replace the main drain of the house. Would that fall into that?
Sorry, say one more time.
The main drain of the house. Let's say your main drain collapsed and you have to replace the main drain. Wow.
Correct. Yeah. Typically it will. You have to, each carrier is different. And that's why it's important to have an insurance agent, not go the direct route or the 1-800 route, so that they can kind of talk you through some of this stuff. But yeah, looking through conditions and the endorsements that are on your policy is a huge part of it, and usually why it's nice to have that insurance agent to kind of make sense of some of that stuff. But yes, typically it will cover sewage lines or drain pipes or electrical lines leading to or from the home, which is a nice cheap coverage to have. Equipment breakdown pretty much covers, a lot of the HVAC systems, so air conditioning, heating, plumbing, can even cover your refrigerator, your washer, dryer, dishwasher, anything like that. Each carrier is very different on this one. They all have their own rules, but if you don't want to fork over however much for a brand new water heater and it broke down because of mechanical failure, usually it can't be just typical wear and tear, but if it something out of the blue and it breaks down, there's coverage for that. And that one's also around $40 to $60 for the year. Also super cheap. Last one I have is the personal property riders. These are for, typically when you have higher value items such as valuable jewelry or valuable art or, guns, stuff like that. So, as a realtor, if you're kind of walking through the home and you see your client has a big old engagement ring on or something, you could be like, hey, just make sure you ask about that when you're getting your policy set up. Because we definitely want to make sure those higher standalone items are covered properly there. All right. Not sure if we lost Brett, but I'll keep going here. Next slide I have is probably there he is. Probably yeah.
Or maybe it's me.
I'm back in now. I can see you moving now too. And we lost him again. All right. Anyways, I'll continue here. And anybody in the chat, anybody who's watching live can stop me here if I'm going too quick. I know it's a lot and I tried to keep it not too much insurance jargon here, but if you have any questions, feel free to throw them in the chat and I'd be happy to answer them. The next slide I have here is the quality of the roof. This is probably the most important thing that I want to talk about today, especially in today's day and age. In the insurance world. Hey, Brett, welcome back. Just talking about roofs here, and probably the most important aspect that we can talk about just because it has such a deciding factor in today's day and age, especially in Colorado. This is something that we've seen quite a bit have an impact on premium or acceptability for policies. But I wanted to talk about, not only the material that you're using, but the age of your roof is super important. As I said in the last point there, we're seeing carriers that are backing out of Colorado in general. They just are done writing in Colorado. They want no part of it for now. Those that are staying in Colorado are starting to just put down quite a few requirements. And one of them that we've seen with quite a few carriers is they won't write homes with roofs older than 10 years old. Some are 15, but it's usually 10 or 15 years old. If it's older than that, they're not going to write it at all. So I wanted to include this one just because as a realtor, it's not only something that you could put in your listing that would be appealing to your buyers and say, hey, the roof is 2 years old. Awesome. But you could also speak to your buying client and say, hey, the roof is, this year, 2 years old as well. This will probably be pretty cost effective on your insurance policy. Hopefully these requirements kind of start to die down a little bit, but I would say the roof is probably the biggest aspect or deciding factor on that right now.
Yeah, I'll tell you what, I just had to do one last year on my own house. Out of pocket. And
was it because your deductible was too high or what was it?
No, it was because the roof was old. It was my wife and I have a mid-century modern 1950s cool, cool house, but it
Yeah.
had the tar and gravel, old school tar and gravel roof, right?
Okay.
That are, they're indestructible
Yeah.
and last forever until they stop working.
Right.
And they just weren't doing it. And ours,
Sure.
weird snowstorm, and it sprung a leak in a weird little spot. And the guy came out and said, "Hey, I can fix this little spot. You're going to be chasing this around now for the next couple of years." And we can just doing the roof. I hit my insurance company up and said, "Hey, pay for my roof." And they said, "It's not damaged because it's tar and gravel. Hail doesn't hurt that. It's just old." So sorry. So I had to pay for it.
Yeah. Sure.
And it's a pricey little guy. So yeah, that's interesting to hear that that a lot of companies are doing a 10-year cutoff. And I was going to actually ask you that because you've been reading some articles around like the insurance companies pulling out of Florida, pulling out of California.
Yep.
And I've been reading that there was some chance that they'd be pulling out of Colorado as well.
Correct.
What's that look like? I mean, if we lose insurance companies in the state of Colorado where we are forced to insure houses in order to buy them, what's that mean?
Yeah. So, I mean, really, of course, it's going to slim down our options and create kind of an issue where it's, we only have 3 carriers left. So we have to pick one of them, and this is the price they gave us. So we have to go with it. I think because of we're on track to starting to lose more and more carriers. I believe I was just told I was at a conference and they discussed that there's talks of there being a Colorado Fair Plan. Which is something that we don't currently have. It's something that I'm familiar with in Minnesota, but basically what this does is make sure that there's no price gouging, there's no monopoly over the industry while we're going through these tough times, and we're not left saying, well, I have to pay this because this is my only option. The Colorado Fair Plan will basically make insurance accessible and affordable for everybody involved. So I'm hoping that progresses quickly. I wish I had more information for that for you, but definitely something that, I think we're going to need coming up here if things don't change. But while we're on that topic here of repairing roofs, I would say that's probably the highest frequency of claims that I've had this year is roof claims due to wind or hail. Number one, always make sure that you're getting multiple opinions. Don't take it from, the one roofer who's door knocking and hops up there and says, "Yep, you need a brand new roof." I always recommend getting 2 or 3 opinions, and normally they're going to come out and do those free estimates or free inspections anyways. So it shouldn't be anything for you out of pocket. But number 2, there's another coverage on homeowners policies that can come in handy, and that's the matched undamaged siding, roofing, or gutters coverage. And basically what that does is make sure that when there's an undamaged portion of your roof, siding, gutters, whatever it may be, they can leave that alone and not have you pay for something that's not broken, right? They're just going to fix the portion that's damaged, and then they're also going to make sure that it matches the undamaged portion. If that clause isn't in there, there's nothing stopping the carrier from paying someone out, and they can come in and put in like totally unmatched materials on your home, and now you have like a quilted blanket of a home with a bunch of different, patterns and materials and stuff. There's nothing stopping them from doing that. So I always like including that coverage in there as well. Yeah.
Got it.
All right, we can move on probably. All right, so yeah, that brings me to some more things that we've seen. These are just a few pieces of advice, I guess, to make sure that your client is more prepared for the whole process, I guess. And the first one is be okay with the waiting time, be okay with getting quotes ahead of time. And really this should be one of your priorities after you find the house that you like and getting quotes. A lot of people kind of wait on this one, and then we're stuck like, hey, I'm trying to close in 5 days. We're seeing carriers that are requiring a 7-day wait time. The quote may be good and they say, "Yep, we're good to go." And the client says, "Yes, we're good to go." Then the carrier will say, "Okay, awesome. Now you have to wait 7 days until we put this into effect." I always say 30 days is a good rule of thumb. Not only does this help everybody along in the process, you as the client, you as the realtor, you as the mortgage lender, and then also the insurance agent. That way, everybody can kind of have enough time to prepare for anything that may pop up. But also it gives you a discount. If you're doing advanced quotes, it usually gives you a discount. Most carriers, I would say, are 15 days, but 30 days rule of thumb for getting an advanced quote kind of makes it easier on everyone. We're also seeing carriers that are requiring bundles. They'll only write home and auto and possibly umbrella. They won't write just the home or just the auto. So I would say, kind of prepare your clients for being open to bundled quotes. And everybody knows usually bundling gives you a discount as well, but some carriers are really getting strict on that and saying, we're not going to write just the home. We need everything. We're also seeing increased requests for pictures of pretty much everything in the house. We've been seeing some weird stuff lately. But the typical ones are, pictures of the furnace or the water heater, or brush clearance is a big one too. But yeah, I tossed in pets. We've had requests to see pictures of the pet. Just weird stuff on there sometimes, and people are getting kind of picky on it. I don't know if that's just because the underwriter wanted to see a cute dog, or if they just didn't believe us on the breed or what else. But, yep. And then we are having more frequent home inspections as well. Home inspections are pretty typical for new policies and stuff, but definitely they've increased in the amount of carriers that are requesting them. And sometimes they were completely random with a carrier, but now they're becoming pretty more frequent. And I included that as exterior in there because a lot of people are, they get worried when they hear that someone's coming out to inspect their home. They're like, oh, do I have to be home? Do I have to walk them around? It's pretty much just exterior. What they're going to do is drive by your house, take some pictures of it. They may fly a drone over it, stuff like that, but it's pretty non-invasive. Most of the times the homeowners doesn't even know you're there, but it does happen quite a bit now. Yep. Next slide, please. All right, so how this helps insurance agents, as we discussed with the roof, definitely list the age of the roof in your listing. If it's within 10 years, that's, that gives you quite a bit of selling power there. It also gives you buying power, I guess, if the roof is not 10 years or newer. It could be something that you could negotiate into the closing deal there. Always mention possible discounts, and this could be in the listing of the home as well, or it could be something that you discuss with your clients there. But you could list all of those things in your listing. Say, hey, there's an alarm system in the home. It's part of the gated community. There's man security. This roof is hail resistant or impact resistant. All of those things could help you and your client in that situation. Again, some of those additional coverages that you could recommend, I would say loss assessment is probably the most popular. Service line and equipment breakdown, as we discussed, are super cheap and affordable ones that I've seen come in handy for some of my clients. So I always give that one as an option. Flood is usually something that you're going to know if you're going to need. But I included that one just because it's a conversation that maybe a realtor should have with their client and prep them for that additional cost of a flood policy. There is a website that usually gives you a pretty good map of what's going to require a flood policy. It's a FEMA website. If you need that, feel free to email me or email Brett or Dan here, or whoever you need to get a hold of. But there's a great website that kind of gives you a map of that. I also included understanding deductibles because a lot of home buyers, especially first-time home buyers, get a little confused by deductibles. And this is something that was my first question to you when you said you had to pay out of pocket for your roof, is because a lot of people don't understand what those percentage deductibles mean. And I'll try and give a quick explanation of it without getting too insurancy, but the percentage is basically if you have a 2% hail deductible, basically what that means is, let's go back to that example of $100,000 house, which is unheard of. But if you have $100,000, yeah, if you have $100,000 house, just for the sake of numbers, your 2% wind hail deductible is going to be 2% of your dwelling coverage. So that would be $2,000 would be your wind hail deductible. Right now, that's a good deductible, but obviously, if it's a $500,000 house and then your percent is 2%, now you're at $5,000. So you're looking at a little different. Or is my math right on that one? Anyways, you know where I was going with that. But it's the deductible of the 10,000. You're right. Like that didn't sound right. Thank you. But it's the deductible or the percentage of your dwelling coverage is what that means. And a lot of people don't understand that. And they're like, oh, sweet, this is a small percentage. But really, it's a percentage of that coverage. And sometimes you do have combined deductibles where it's, your all perils deductible is the same as your wind hail deductible. So sometimes it'll just list one deductible, and that basically means whatever happens to your house, this is what you pay first. And so, hopefully some of this stuff helped you look, a little more educated on this stuff. I do have some more key takeaways on the next page, I believe. Yes. So definitely ensure that your client has the right dwelling coverage. We discussed how to do that. There's CoreLogic, which you can hop on. It's what most carriers will use. It's what most insurance agents will use. Again, that's called CoreLogic, and you can just hop in there, plug in the address for the property, include the characteristics, and that'll give you a good replacement cost estimate. Anybody can hop on there and do that. So definitely something that you can look into. Suggest those miscellaneous coverages if needed, or if you feel like your client needs them. Again, the age of the roof is probably the biggest thing right now in insurance, unfortunately. So definitely something to keep in mind on your deals here. Again, encourage those advanced quotes and your clients' openness to bundling. Sometimes they're like, well, I've been with my auto, and even though they're a first-time home buyer, I've been with my auto insurer for years, but they're not great on the home. So I want to keep my auto with them and move the home somewhere else. I don't know that I would encourage that kind of a loyalty during this time right now. It's definitely something that, if you're going to get a better deal for the home and the auto, you may like your carrier at this time, but if you're looking for price and for coverage, usually bundling is the best way to go. Definitely know the year of the updates to the home. Most real estate agents already know this, but just to reiterate, not only is that going to help you closing your deals, but will also help on the insurance side of things. You can also mention that newer updates to those things can definitely lower premium. And we already discussed it's getting expensive. So everybody just hang in there, I guess, and prepare your clients for it's not how it used to be. It's not as affordable as it used to be, unfortunately. But like I said, my hope is that somebody comes up with a good solution here, and the cycle starts over pretty soon here. So basically just familiarize yourself with the coverages and make sure your clients know what they're talking about or what they're looking at, and hopefully they have the peace of mind to move forward with the deal there.
Got it. Hey, real quick, Don, I'm going to ask you some questions. I have some questions for you, but I've got a semi truck that just pulled up in front of my office.
Okay.
You guys hear that? So first question, there's one that popped up in line. It says, is there a way to know how different rates would be for buyers depending on pets? And actually, this kind of goes along with what I was going to ask. Is there a way that, like, let's say you got a listing coming up?
Mm-hmm.
Can the listing agent or the seller reach out to you and say, hey, look, what would be an estimate on insuring this new property?
So I wish I think that's one of the things insurance hasn't figured out yet. I don't think our industry has quite figured that out yet, because that's probably the question I get asked the most is, especially by Ian. Ian, where he'll just call and be like, hey, what would it look like for this? And I'm like, man, there's a lot more factors that lead into it, unfortunately. Not only personally, they want to look at how long you've stayed with insurance carriers. Usually, I always recommend trying to stay with your insurance carrier for 2 to 3 years. They'll look at people who have changed every year and know that they're not loyal and they're just price shopping. And so they just give them a high price off the bat because they're like, well, you're not going to stick with us anyways. I don't know that we really want you. So really, I mean, there's a lot of factors like that. Your credit score leads into it. Your claims history pops up, the location of the property, how many residents are going to be in there. If there's been claims on the property in the past, even though you haven't lived there, is it an area that, has been hit? Is it likely to be hit again? There's so many factors that lead into it that unfortunately you can't really just be like, oh, that's a 2,500 square foot house in Colorado Springs. I think it's going to be X number. Unfortunately, we can't really do that.
Okay.
Yep.
And that leads me to my other question. So, you kind of just talked about it a little bit. The major components when it comes into deciding what the insurance rates are going to be for somebody is going to be a combination of, like you said, credit score, length of time that someone's been with their insurance company. That's huge. It makes sense. How about claims on the house before the person's bought it? Do they look at that?
So they do look at it as a risk involved, but not as a risk of the insured. So it's basically, this could be a risk for the home that we're insuring, but it's not a risk for the person that we're insuring the home for. So it typically doesn't have much of an effect on the actual new policyholder. But it is something that underwriters will consider and kind of look at.
Because I had one, I think this last summer, where the property being purchased, they had 3 claims in a year.
Mm-hmm.
And the first 3 insurance, I think we actually ended up writing it. The first 3 insurance companies that he went through all said because of those 3 claims, either A, they wouldn't do it, or B, the premium on it was, it was.
Yeah. And that can happen when claims get a little excessive. But if it was one hail claim 2 years ago, and you didn't even live in the home at the time, probably you're not even going to notice that they looked into it. But yeah, something where it's been, 3 natural disaster things that have happened to the home within 1 year, whatever. I can't quite remember what happened to that one, but that might pop up or throw up a flag for underwriting and say, hey, it seems like this home might be in a dangerous location here. So
so maybe a question that the listing agent, you ask your seller, like, hey, have you had a lot of insurance claims in the last year on your property?
For sure. Yeah. Yep, for sure.
I'll tell you, I did have one that came up recently. It was a property up in Black Forest.
Yeah.
Normal house, and their insurance quote just came back at $9,800 a year, and I'm like, holy cow! Okay.
Yeah. With stuff like that, where it's been, areas that have been known to have a wildfire like that, typically there's another good reason to have an agent is we can kind of deal with the underwriters and kind of convince them that, hey, if we mitigate some of these risks, would you be willing to look at it then? And usually that's that brush clearance. That's when they're asking for pictures of brush clearance. They want to make sure if there is a fire again, what's the likelihood of this house catching on fire? Well, if everything is 50 yards away from the house, probably a lot less likely than if there's bushes right outside the window.
Got it.
Yeah.
Well, I appreciate you coming on. And the big one I took out today was the service line. I didn't know about service line insurance. You guys knew that. Awesome. Especially in our town, West Side downtown, where I can do a lot of my business. Like, everybody's got an old clay pipe. It's if you can get a service line insurance on that thing, that's awesome. That's great.
For sure.
Can they go back? Sure. Can you add that to your policy?
You can. Yeah, that's an additional coverage that you can pretty much add at any time there. Again, super cheap. I always recommend it to my clients. Some of those clients will just be like, hey, I'm just looking for straightforward stuff. Totally fine. I understand it. But, you're purchasing insurance for a reason, and it's to cover you for when things hit your pocket a little too hard. And so that's one of the coverages that's, like I said, $50 a year, and it could save you thousands out of pocket. So, yeah. And I don't want to miss Dan's question there. It was something about, is there any way to know a difference for pets? I'm not sure if you're asking for different breeds or if it was difference will be for buyers depending on pets. If it's just pets in general, really, either way you're asking this, no, there's no way. There are more risks associated with certain breeds, unfortunately. I think it's kind of a bummer and a stigma that I don't agree with. I've met some of the sweetest pit bulls ever, but unfortunately, a lot of underwriters look at those as a high risk breed. Some will allow certain breeds and some will not allow certain breeds, but in terms of if you're looking for what's my insurance premium if I don't have a pet versus if I do have a pet, not really. What's really just recommended is making sure that your homeowner's liability coverage covers your pet. A lot of them exclude your pet. And so that's something that I included in my additional coverages suggestions. You can look into additional pet liability. So if your dog does end up biting someone, you can make sure you're not paying out of pocket for medical bills and stuff like that.
So before I open up my backyard tiger sanctuary, I'll
Yeah.
my insurance company. Okay.
Correct. Yes. Call your agent. Correct.
Yep. The big cat's on hold for now.
yeah, that's right. Yeah.
Well, Tom, I appreciate it. Appreciate you stopping on here, man, and chatting. It's always good to have professional in this realm. I mean, insurance is one of those things that I think in our like I think of real estate. We've got mortgage, we've got property, and we've got insurance. I know that I do personally. About the rest of you guys, I always kind of forget about the insurance side of it. It's just like go get an insurance policy. I don't just go get it. It's always nice to be able to refer them to you because I just say, all right, go talk to somebody. And one thing I think I've been noticing, I'm glad you addressed it too, is the difference between a broker and a captive. I call them the big five, the USAAs, State Farms, the big five. And I've noticed that all of them have gone up significantly in terms of the premium this last couple of years. So it's nice to be able to have the option to shop that middle 50, that are a little bit some business. So it's a great opportunity.
Yeah, I would say that's correct. They've pretty much every one of the captives have gone up this year. And sometimes when you go with one of those captive agencies, sometimes you do have an agent, sometimes it's just a 1-800 number. But again, another great reason to have an insurance agent is a lot of those captives are, and I got to tread lightly here, but there's been reports of mishandling of claims or non-payment of claims, which, I mean, what's the point in your insurance if you're not going to get your claims paid out? But having an agent, somebody is going to go to bat for you and make sure that, your best interest is in mind. A great way of viewing it is when you're with a captive agency like State Farm or Farmers or something like that, those are agents and they're working for the company. They're working for the carrier. A broker, I'm working for the client, which is a big differentiator in that I will go to bat for you. My team will go to bat for you. We'll make sure those claims are getting paid out. And we'll speak with adjusters and whatnot, make sure you're getting the best deal out of it.
Awesome. Well, thanks, Tom.
Thanks for having me, Brett. Appreciate it.
I will see you soon. Okay, buddy. Everybody else, thanks for joining the call today. We cut it. Hey, we're 10 minutes early. That's awesome. Without Ian, I can faster, right?
Yeah.
Weeks, we'll be jumping on here with another industry professional in a couple weeks. In the meantime, have a great beginning of fall. If you have any questions on what the market's doing, hit us up. You know how it goes. And just appreciate your time.
See you guys.